Welcome to today's deep dive. We are so glad you're joining us for this one
Mm.
because today we're looking at a company that basically seems to be breaking the laws of physics in the AI world.
Right, the financial physics anyway.
Yeah, exactly. Because, the accepted rule right now is that if you want smarter models, your computing costs just have to skyrocket.
Oh yeah. We're in this sort of brute force era of artificial intelligence.
Right.
Like, you want a model that can write complex code instead of just, I don't know, summarizing emails. Well, you feed it 10 times the data, run it on a massive cluster, and you just eat those massive hardware bills.
But looking at the source material we're digging into today, which is MiniMax's highly anticipated March 2026 earnings call transcript, that whole law of physics seems to be breaking.
It really does. It's a fascinating transcript.
I mean, right out of the gate, they reported a 159% jump in revenue year over year. That's $79 million for 2025.
Which is huge.
And then in just the first 8 weeks of 2026, they already crossed a $150 million ARR run rate.
Yeah, the growth is explosive. But the real story isn't just that they are building a popular app. It's that they're giving us a look under the hood at how an AI company can actually scale and operate profitably in a really crowded market.
Which brings us to the craziest part. While scaling that fast, they somehow slashed the cost of running their M2 model in half in just 2 months.
It's incredible, and that's exactly why this transcript is so important for potential investors or anyone watching this space.
Okay, let's unpack this. Because to understand how they're scaling, we have to look at their unit economics.
Definitely.
So breaking down that revenue split, $53 million came from their AI native products and $26 million came from their open platform.
Right.
But there's this one stat from their CEO, Dr. Junjie, that just blew my mind. He said that running a complex AI agent continuously for an hour at 100 tokens per second now costs exactly $1.
Yeah, that is a complete game changer.
Like a $10,000 budget means an enterprise can run an agent nonstop for an entire year.
And if you think about the margin expansion that unlocks, it's wild. I mean, their gross margin jumped from 12.2% to 25.4% year over year.
Wow.
And as you mentioned, inference compute costs for that M2 text model dropped by over 50% just between December 2025 and February 2026.
Wait, this is where I need to push back a little.
Sure.
Usually, as models get smarter, they need massive, expensive compute. How is MiniMax actively slashing costs
Yeah.
while upgrading their tech? It feels like a contradiction.
It does, right? It seems impossible until you look at how they are actually engineering these models. It's not magic, it's just relentless optimization.
Okay, how so?
Well, normally when an AI answers a complex prompt, it basically wakes up its entire neural network. It activates billions of parameters all at once.
Which takes a ton of electricity and computing power.
Exactly. It's highly inefficient. So what MiniMax did is they tweaked their algorithms and encoding processes to create incredibly precise, sparse activations.
Sparse activations.
Yeah, they basically only wake up the exact specific neural pathways needed for that one prompt, so they shrink the computational footprint of every single query.
Oh, wow. So they aren't just buying cheaper servers.
No, not at all. They're finding these brilliant mathematical shortcuts. It lets them run like 10 queries on the same hardware space that used to only fit one.
Okay, but having incredibly cheap inference costs is only an advantage if people actually want to use the product, right?
Absolutely. Cheap garbage is still garbage.
Exactly.
Yeah.
And here's where it gets really interesting. Their development pace is just blistering. They went from the M2 model to M2.1 to M2.5 in a 100-day sprint.
Which is practically unheard of in AI right now.
Right. And M2.5 wasn't some minor update. It topped the open router rankings and immediately hit 50 billion tokens in daily consumption.
That 100-day cycle is just wild. I mean, usually training runs alone take months.
Let alone red teaming and deploying the infrastructure. It's like they aren't just building a faster car, they're simultaneously building planes, trains, and boats from scratch.
Yeah, that's a great way to put it. And if we connect this to the bigger picture, it explains their core competitive advantage, their full modality strategy. From day one, they weren't just working on text. While iterating on M2, they concurrently released Hailuo 2.3 for video.
Wait, at the same time?
Yeah, simultaneously. Hailuo 2.3 for video, Speech 2.6 for voice, and Music 2.5.
Which is the total opposite of what everyone else does.
Yeah.
Most legacy AI companies just perfect text first, right?
Exactly, because text is easier. It requires less specialized architecture. But Dr. Yan explicitly stated that cross-modal fusion is the fundamental prerequisite for pushing the boundaries of AI intelligence.
Oh, so it's not just about having a bunch of separate tools. It's about combining them to make the AI fundamentally smarter.
Yes, exactly. Think about it like a human. A child doesn't learn what an apple is just by reading the word in a dark room.
Right. They see the color red, they feel the weight of it, they hear the crunch.
Exactly. By forcing their architecture to process spatial relationships in video, nuances in speech, and logic in text all at once, the neural network develops a much richer world model.
Man, that makes so much sense. So building all these different modalities is really the foundation of this massive strategic pivot they talked about.
The AI platform pivot,
Right.
yes.
But I have to ask, what does AI platform actually mean here? Because in the internet era, a platform was just a traffic gateway, like an app store.
Yeah, the word gets thrown around a lot.
Right. So how is an AI platform different? It's not just an app store, is it?
No, it's a totally different economic model. MiniMax defines their platform value with a very specific formula: intelligence density multiplied by token throughput.
Okay, hold on. Intelligence density. Let's define that for the listener. What does that mean for an enterprise customer?
So intelligence density is essentially how capable the AI is per interaction.
Okay.
Like asking a model to summarize an email thread is low density.
Sure, basic stuff.
But handing an AI a disorganized 50-page financial disclosure and asking it to build a predictive Excel model from scratch, that is high density.
Oh, wow. And then token throughput is just the volume of that intelligence being consumed, right?
Exactly. And this really highlights a crucial strategic decision they made back in 2023. They deliberately chose not to build a general mobile assistant.
Like Dubao or ChatGPT.
Right. They walked away from that race because consumer AI has massive churn and it burns so much cash.
So they didn't want to get caught in the hype cycle.
Exactly. They focus on infrastructure instead, attracting massive enterprise usage. And they have over 214,000 enterprise customers globally now.
That is massive. But to build this multimodal platform without the bottomless budgets of, like, massive tech incumbents,
Yeah.
they are relying on a super unconventional workforce.
This is one of my favorite details from the transcript.
Yeah. Nearly 90% of MiniMax's human employees use internal AI intern agents for everything: software development, data analysis, HR, sales.
They're essentially drinking their own Kool-Aid.
Right. But here's my question. Sure, they're automating some emails and basic code, which saves time, but how does that actually help them invent the next generation of AI faster?
Well, this raises an important question about R&D. It's not just about saving time, it's about a closed-loop R&D flywheel.
A flywheel.
Yeah. Dr. Yan talked about a shift from teaching agents to observing them. When your whole company runs on your own AI, you get a front row seat to the exact moments where the models fail.
Oh, so when an AI hallucinated internally, they catch it immediately.
Exactly. If a senior engineer is using an agent to write code and it drops the context halfway through, that failure is immediately captured as high-fidelity data.
That is so smart. It isolates the exact highest economic value problem that needs to be fixed.
Right. It perfectly defines their R&D priorities for the next update. That's why their iteration speed from M2 to M2.5 was unmatched.
Because the entire company is basically a live laboratory.
Absolutely.
Which brings us to the future horizon. All of those internal failures and learnings are feeding directly into their next massive launch, the M3 models.
Yes, the leap to L4 and L5 intelligence.
So what does this all mean? Like, break down Dr. Yan's vision of L3, L4, and L5 intelligence for us, especially how it impacts the listener's future workplace.
Sure. So L3 is basically what we have today: highly capable, supervised assistants.
You're still driving the car. The AI is just the GPS.
Great analogy, yes. But M3 is targeting L4 and L5. L4 represents a colleague-level collaborator.
Colleague level, what can it actually do?
Well, imagine handing an L4 agent a hypothesis. It could autonomously read a research paper, independently design software experiments, write the code, run the simulations, and give you a synthesized report.
Wait, really? Just fully autonomously designing and running software?
Yes, in a secured sandbox environment, of course, so it doesn't break everything, but that multimodal training means it can read error logs and fix its own code.
That is wild. Okay, so if that's L4, what on earth is L5?
L5 is organizational level intelligence.
Okay.
If L4 is a brilliant individual contributor, L5 is an entire autonomous department, multiple AI agents collaborating on complex cross-functional tasks.
Like what?
But, leaving you with the final thought to mull over, if MiniMax's vision for L5 organizational intelligence is truly right around the corner, what happens to the concept of a company itself?
Oh, that's a huge question.
Right, because historically, you need venture capital to hire 100 engineers and build an HR department. But in a few years, could an entire enterprise just be a single human founder collaborating with a completely autonomous L5 AI organization?
The ultimate democratization of scale. Friction is no longer capital, it's just pure imagination.
Exactly. The fundamental economics of starting a business change completely.
Well, we will definitely keep watching how these scaling laws evolve. Thanks for joining us for this deep dive.